The main reason I'm here is to clear my name that I have nothing to do with Bitcoin.
A growing trend that we've seen for the past few months is the cryptocurrency market, which is going through its rise and fall period regarding several cryptocurrencies. It comes as no surprise since the crypto market is highly volatile to begin with, so if you're only here for a short time, you may not see your investments pull through anytime soon. Cryptocurrency has been around for a while, but it is only in recent years that we saw a boom in this industry, causing even high-profile figures to partake in it. However, we're currently seeing the bear market in cryptocurrencies, so do we pull out our investments or wait for them to rise? Experts have something to say about the current market, and we're here to share it with you guys today. Hey guys, what have you been doing lately? Welcome back to our channel, where the topic of today's episode will be about the current crypto bear market, if we'll see an end to it, and what the experts are saying about it. So if you're curious and want to know more about today's topic, then watch till the end of the video. But before we progress any further with today's topic, kindly hit the like button and subscribe to our channel with the notification bell on so you won't miss out on any of our new content. Cryptocurrency. What is it? For those of you who have heard of cryptocurrency time and again, but still have no idea what it's about, allow us to enlighten you a bit. Cryptocurrency, or simply called crypto, is defined as a form of payment that can be exchanged online for goods and services. Many companies have issued their own currencies, often called tokens, and these can be traded specifically for the goods or services that the company provides. It makes use of a technology called blockchain, which is a decentralized technology spread across many computers that manages and records transactions. As such, a lot of people find it appealing because of its security. The first cryptocurrency to enter the market is the Bitcoin, or BTC, which was launched in 2009 by Satoshi Nakamoto. It's not known if this is a group of programmers or a single individual. As of January 2021, there are more than 4,000 different cryptocurrencies in existence, with Bitcoin still considered as the most popular and leading the lot. What is a bear market? Now that we've defined what cryptocurrency is, let's continue with what's currently happening in the crypto market. For investors, it's common knowledge the difference between a bull market and a bear market, of which the latter is what the market is currently going through. A bull market is one in which stocks have gone up, whereas the bear market is one in which stocks have fallen. Let's elaborate further on what the bear market is. A bear market is typically defined as a 20% drop from recent highs. The most common usage of the term is to refer to the S&P 500's performance, which is generally considered a benchmark indicator of the entire stock market. The S&P 500 is a stock index that consists of the 500 largest companies in the US. It is generally considered the best indicator of how US stocks are performing overall. A bear market is caused by several factors, but a weak or sluggish economy is usually the main culprit behind this phenomenon. This comes as no surprise since we're still going through the global health situation and the economy has yet to bounce back from it. The signs of a weak or slowing economy are typically low employment, low disposable income, weak productivity, and a drop in business profits. What's going on in the market lately? Currently, the cryptocurrency is going through a bear market. That is, stock prices are going down. As a result, some investors are already selling their stocks in order to cut losses, whereas others are buying stocks now that prices have decreased in the hopes that they'll ride it out and investments will pay off. Bitcoin, the leading crypto in the market, is already in a bear market, which is alarming for all investors since BTC is tied to almost all of the cryptos. So if BTC goes down, everything else is affected. Ethereum, ETH, the second leading crypto, also experienced a drop in market prices lately, wherein it went down to nearly $1,900, their lowest since early April of 2021. The cryptocurrency, which is the native token of the Ethereum platform, declined to $1,902.08 according to CoinDesk data, which led many to believe that it's going through a bear market. But some stock analysts and investors believe otherwise. Host of the Wolf of All Streets podcast and crypto investor and analyst Scott Melker thinks that Ethereum is not going through a bear market at all. I do not believe that Ethereum has entered a bear market, but rather it is completing a healthy replacement before a larger move to the upside. Stock analysts often point to a drop of 20% or more from recent highs as a marker for a bear market. This number is often invoked when an asset's price declines, Melker explained. He added further, what many fail to realize is that the definition of a bear market also includes a time frame, usually longer than 2 months. crypto moves at the speed of light, and 20% drops are insignificant and can happen in less than a day. Based on this statement, we're reminded of the volatility and high-paced nature of cryptocurrency, and Melker did point out that it's a bit too early to classify what's happening today as a bear market. Co-founder of decentralized capital marketplace Alliance Block, Amber Gadar, also commented on the price volatility that defines digital currencies. The traditional definition of bull and bear market is inconsistent with the price action of crypto, as 20% plus dips are frequent and are often part of a correction followed by a broader buildup. Throughout 2016-2017, we had corrections of 30% plus. There is no rule of thumb, as this asset class is too young and historical data is too little, Gadar explained. What you should do during bear market. First and foremost, any investor who decides to enter cryptocurrency needs to be aware of the volatility of this market. That's why it's important to diversify one's portfolio, which allows you to cut losses and maybe prosper in another stock. Another thing one needs to do is research thoroughly. Find out which stocks are resilient and have stood the test of time. Buying a company with a virtually unshakable business, an industry leader with a dedicated fan base, or one with a vault chock full of intellectual property would all be smart moves. The private financial and investing advice company based in Alexandria, Virginia, The Motley Fool, has published a report of some resilient stocks in the market and named 3 of them. The first one is Starbucks, SBUX, the world's largest coffeehouse chain. Admittedly, SBUX was the first to show a decline in stock prices once the global health situation hit and saw a loss of 1/3 of its value between February and March 2020. But SBUX proved to be strong and sought ways to bounce back, which they saw through the use of their mobile app that became a hub for takeouts and delivery orders. A year later today, Starbucks is enjoying a full-scale recovery of its business in the US and is better positioned to thrive as the world begins to reopen. Net revenue grew 11% in the second quarter, driven by a 15% jump in global comparable store sales. Also named by The Motley Fool as another resilient company is Apple, AAPL. Like every other company out there, at the start of the global health situation, Apple was forced to close some of its retail stores and has seen staggering store openings and closings in the past year. Fortunately, e-commerce became its saving grace and used the online store for consumers to get their Apple products. Revenue during its fiscal 2020 second quarter edged 1% higher, a remarkable feat for a company that generated more than $58 billion in sales. Last but not least, they named the happiest place on earth, Disney, or DIS, as one of the most resilient stocks in the market. We know Disney's biggest income generators from 2 things, its themed parks and films. But because of the global health situation, the company was forced to shut down its biggest income generators. Despite that, Disney managed to stay afloat by making use of their business diversity. We all saw how Netflix saw a boom last year, right? With this, Disney turned to launching its streaming service, Disney Plus, which ramped up operations in no time at all. The streaming service garnered more than 100 million subscribers in just a year, cutting Netflix's streaming subscriber lead by half. At the same time, Disney's broadcast and cable networks helped keep many of the homebound entertained during the lockdowns. During its 2021 fiscal second quarter, which ended April 3rd, revenue was down 13% year over year, while segment operating income inched up just 2%. While that seems dismal, it's a significant improvement from the height of the global health situation, when revenue dropped 42% year over year and segment operating income plunged 72%. Disney is slowly recovering, and the recent opening of California Adventure and Disneyland Park weeks ago signifies that Discovery is well on its way to recovery. So with that, we're concluding today's topic about the crypto bear market, and hopefully you learned a lot in today's video. If you're planning to enter and buy stocks in the market, you're free to do so. Just be well aware that the market is extremely volatile, so you need a lot of patience for this to pull through. And don't forget to diversify your portfolio so you can manage to cut your losses should you experience the bear market. Thanks for watching today's video, and before you go, don't forget to hit the like button and subscribe to our channel with the alarm bell icon on so you can get notified as soon as we upload new content. We'll see you again in the next episode.